As the Federal Reserve props up the strength of the US dollar with high interest rates, this lowers the price of gold. This is the opportunity. With the inevitable Fed pivot and monetary easing, gold prices will rise. To better understand the benefits of gold, we will hear from Lyn Alden. Lyn Alden is an American investor, engineer, highly respected macroeconomic analyst, and writer. She has been featured in Wall Street Journal, MarketWatch, Barron's, and many other publications. We will hear from economist, American lawyer, investment banker, speaker, and best-selling author, Jim Rickards.
We've seen the inflation spike, and then in many countries we're starting to see disinflation, right? With central bank tightening, with strong dollar, we're starting to see some of that disinflationary pressures, and I think a lot of people assume that once that goes down, it's just behind us now, and that was the story that happened. Whereas I think an issue is that inflation is ready to return should, for example, the Fed eventually pivot or get dovish in some way. Basically, as long as they stop holding down demand, as long as the supply side's unaddressed, it's ready to come right back. In this type of scenario, you have to go back to kind of the 1940s to find a similar environment, which was, major developed countries with very, very high sovereign debt levels, and then they run into inflation. And the question is, how do they handle that? And normally the way they handle that is by, printing despite the fact that inflation's high. So if you look at public debt and private debt in the United States, it's about 370% of GDP. Then that is bullish for more scarce assets in the long term.
I'm pretty bullish on gold. I'm starting to see it confirmed in price. And so, for example, with a declining PMI, basically risk off of environment, gold kind of finally has its chance to kind of decouple from S&P 500 to the upside. And so that combination of decelerating economy and if the Fed indeed is unable to be as hawkish as is currently priced in, that could be a bullish catalyst for gold. And so it's really once the other things start to encounter weakness that people can look around and say, well, what's doing well? And one of them is, I think, in this declining PMI environment is gold.
But we are seeing a lot of dysfunction in the treasury market. And part of the reason is when the dollar gets very strong, the foreign sector generally stops buying treasuries in aggregate. And it's because the whole point, the main reason why, say, foreign central banks hold treasuries is so they can sell them if they need to defend their currency at some point in the future. And so we've also seen China reducing its treasury holdings. And so we kind of have an issue where the Fed's not buying treasuries, the foreign sector's not buying treasuries, U.S. banks, due to SLR regulations, are not really buying treasuries. The end game of a very, very indebted sovereign country is that they have to do often QE type of activities, even when inflation's above target, just to support the bond market. But anyway, right now we're in a decelerating environment. In addition to the Fed being, doing quantitative tightening, raising rates, this generally is a pretty toxic combination for risk assets.
If I had to pick one word to describe risk in capital markets, I would say confidence. People like to talk about Bitcoin. Is Bitcoin money? Well, it's a kind of money. I wouldn't argue with that. But at various times in history, feathers have been money, clamshells have been money, silver, gold, paper, Bitcoin, digital, crypto. They can be money if people have confidence. But the minute confidence is lost, they're not money anymore, and whatever you had in that is wiped out. So then the question is, well, why should I have confidence? That's a matter of trust. Do I trust the policymakers? Are they helping the economy, or are they trying to rip me off with inflation? Are they lying to me? Well, just look at any opinion poll. People don't have much trust in policymakers these days. So I would say that confidence is close to a tipping point. They take it for granted. They assume that the dollar is king and always will be king, and how could you possibly question the confidence of the dollar? Well, people are questioning it, and more will do so in the future, but it is one of these tipping point things where it's not like a long, slow, gradual decline. It can happen very quickly, and that's the point. Right. Well, the first piece of advice I would give is position now. Don't wait till this happens, because when it happens, it could happen very quickly, and B, you may find that the things you want to go into are not available at any price. I do a lot of public speaking and writing, as you know, on these topics, and one of the questions I'm asked most frequently is, hey Jim, when's it going to be? What's it going to be? Almost as if I'm supposed to call them at 3:30 in the afternoon the day before, and they're like, oh, I'll sell all my stocks at the close and buy gold the next day. It doesn't work that way. I can see it coming, and I can describe the dynamics, and I can understand the magnitude of the risk, but I'm not going to know what day it is, because it's going to be some unexpected event that maybe none of us see coming. I can just tell you it is coming. So first of all, position yourself now. What I recommend to investors, you want about 10% gold. Maybe a little more if you want to lean into it, if you have a higher risk appetite, but not much less than that.
With the inevitable Fed pivot and more money printing, gold will rise. To paraphrase the famous hockey player Wayne Gretzky, I go where the puck is going to be, not to where it was. He also stated, you miss 100% of the shots, you don't take. For additional resources on how to protect your wealth, see the links in the video description. Thank you for watching.